Let's get to the big story breakdown. As we head into the second half of January, we are looking at U.S. stock futures deep in the red, but on Wall Street in the first half of January, AI buzz kept big tech in the lead, but there has been an overall broadening across the market. Over the past 2 weeks, industrials, materials, energy, and consumer staples all outperformed the broader market, but small caps have also been joining in. The Russell 2000 saw an advance since the start of the year, outpacing the S&P 500. Well, joining me as we kick off a holiday shortened week is Michael Reinking, Senior Market Strategist at the New York Stock Exchange. Michael, good morning. Thank you so much for joining me.
Good morning. Thanks for having me.
Well, on this Tuesday morning, we are looking at the major stock averages pulling back, and we're also looking at the U.S. currency global bond lower. So bonds lower. So
yes.
What do you make of what's happening?
Yeah. So I mean, kind of as you've pointed out, in your lead up to the show, there's plenty of headlines to be focused on. Markets had gotten off to a pretty good start, in the beginning of January, and we're seeing our first gut check at this point, really. And interestingly, that comes on the back of Friday being options expiration. So you've seen kind of some of those hedges that kind of portfolio managers may have had in place, kind of rolling off. So that'll kind of adds to a little bit of the volatility, where there may be a little bit of a scramble to kind of put some of that, kind of put some hedges back on. It's interesting. We're in this kind of this point in the market where you're seeing yields move higher, kind of breaking a downtrend in U.S. Treasury yields. That's been in place for the last 6 months or so. We obviously there's kind of the de-anchoring of yields in Japan, which is driving kind of a lot of that, and kind of that coupled with kind of the increase in volatility that we're seeing. Right, you get into one of those periods of time where you could see kind of some of that quantitative de-risking that we've talked about kind of many times in the past. Now the S&P 500 is looking down a little over 1% here at the open, which will put us right around the 50-day moving average, which could lead to kind of a little bit more kind of an acceleration to the downside if we start to break below that.
And another thing we have to keep in mind is that the World Economic Forum is kicking off in Davos, and Trump is expected to speak tomorrow, so we'll keep an eye on what comes out of Davos. But as we head into this week here in the U.S., we get more earnings, more economic data, and of course the Fed meeting for the month of January is in the spotlight. And while we won't get a summary of the economic projection, we will be watching out for what happens in terms of Powell's pressers. So a lot to think about as we head into the end of this month. So what do you think is most important to keep an eye on?
Yeah, I mean, right now, kind of the geopolitical situation is kind of at the forefront. And, kind of with the administration, there was some thought that we would see them dialing back some of, kind of their policy heading into kind of the midterms. Maybe we're still a little early in that process, but what we've kind of learned is like to expect the unexpected, right? And we're seeing a little bit of that again, right? There's this refocus on kind of on tariffs, right, which is adding to kind of some of the overarching uncertainty. We'll have to see kind of what President Trump lays out, kind of in the coming days. This morning, Treasury Secretary Bessent kind of suggested, everybody kind of hit the pause button here and take a deep breath, and things will kind of work themselves out. So I think right now Washington is kind of at that forefront. A close second, I think, is kind of earnings, and we're going to really start to pick up kind of the pace of earnings releases and kind of broaden that out beyond just the financials, kind of in the coming days, right? And I think that's going to be really important to see if there's this continuation of that rotation that we've been seeing kind of early this year, kind of into more cyclical areas of the market and away from kind of kind of the mega cap tech.
Yeah, and I'm glad you brought up the word rotation, because that is something that we've been keeping our eyes on in terms of sector. But I think also it's interesting to see what's happening so far in 2026 when it comes to factors, and whether we're talking about M&A, growth, value, or IPOs. There's a lot coming down the pike. So what do you think is key moving forward?
Yeah, I mean, so what we're seeing is kind of there's been a little bit of a rotation out of growth into value, right, and kind of down the capitalization scale, right. There's been very big outperformance in kind of small caps, kind of versus large caps. Thematics, the thematics that have been driving kind of a lot of those kind of the smaller cap names within kind of the Russell 2000 over the last year, you're seeing kind of some of that split a little bit, where the nuclear theme has been kind of pretty positive. kind of quantum is a little shaky to kind of start the year, and then you're kind of seeing the reemergence of kind of rare earths, kind of with the escalation of geopolitical uncertainty. So the other big factor that everybody's kind of paying attention to is kind of the AI trade, right, and kind of how that evolves, and that's going to be a big, a very big topic, as we head into kind of earnings season in terms of the kind of the capex, and how that capex is kind of being kind of where that capex is expected to go, how it's being financed, right? And then the other piece is that we've watched kind of software names underperforming, kind of as you've seen, kind of Claude and a lot of these kind of AI models, kind of showing that you can displace some of the software sector. This morning, interestingly, we got an announcement from ServiceNow and OpenAI in a partnership, which kind of suggests that the two technologies are kind of working together.
Well, Michael, a lot of moving parts here as we kick off this week, so thank you so much for joining us, and thank you so much for breaking it all down for us.
Thanks for having me.
Thank you.